Good afternoon. I'm Peter Towers, Managing Director and founder of ESS BIZTOOLS. Welcome to Accountants Minute Podcast, your launchpad into business advisory services. This was the theme of edition 431 of Accountants Minute. It's where we look at how you could use the starter package, which has been developed for accountants and for bookkeepers who are interested in expanding the range of services that you are offering to your clients to help your clients survive in business. And they need assistance at present. In Australia, we have the highest rate of failure in small businesses ever, according to the Small Business Ombudsman in his latest report. The highest failure rate ever. According to the Ombudsman, about 50% of SMEs are not earning a living the same as the basic wage. That's a disgraceful situation for our clients to be in. And I think we need to have a close look at the services we're providing, because it's very obvious that the preparation of a tax return is not helping our clients survive. So why do so many businesses fail, and how can you help them? A lot of people subscribe to a theory that if you've been in business for 2 to 3 years, you've made it and you'll be very successful. Unfortunately, this is a myth, because Michael Gerber, the author of the E-Myth series, indicated in an interview that I was watching him in last week, 98% of businesses fail all around the world, not just in Australia, before their 10th anniversary. 98%. This is an enormous loss and a disaster for a lot of families. I suspect that a lot of people shouldn't have been in business in the first place, but they are, and they need our assistance. I'd like to share with you some of the comments that Michael Gerber made in the interview that was hosted by David Jennings, the Managing Director of Systemology and the Chief Writer of Systemology. I'm a great fan of Systemology because it's really outlining the systems that we need in businesses. And if you haven't made contact with Systemology, I suggest that you will probably be able to do so at great benefits for your clients. Some of the comments, that Michael Gerber made in this interview. If there is no system, the company falls apart. Systemize the work to be done. Visualize the end result. Now, this is at the very beginning. When you first talk to your clients, ask them to visualize what they want this business to turn into. What's their vision? Leadership is critical to the establishment of systems, according to Gerber. He said one of the problems is a lot of business owners don't tell the team what their vision is. And he asked the question, can you imagine a movie being made without having a script written so the actors knew what they had to say? Or could you imagine a musical without a music score having been composed so that the musicians knew how to play, so that the conductor could bring it all together? So why do we put up with businesses starting with no plan, no vision, no coordination? So the leader needs to identify the vision, Gerber said. And then he referred to McDonald's. And he reminded us that the McDonald brothers were already an operating business when Ray Kroc come knocking at their door. And I heard part of the story that I'd never heard before. Ray Kroc was a door-to-door salesperson, and he was selling a product that the McDonald brothers were using in their cafe that they developed. So Kroc was intrigued as to why they were going through so much equipment. So he drove across America, apparently, got to the other side and visited the premises and just looked at what was happening. Gerber said Kroc was not an educated man. He was 52 years of age, had no college education, but obviously he was a good observer. So after a couple of days of observing what the McDonald's brothers' businesses was doing, he went and approached them and asked them why they hadn't franchised. And they said, well, they had a go at that, but it didn't work. They tried to do it in their current business. But what Ray Kroc did was say, well, I will do a deal with you. I will franchise the business, and obviously negotiated some sort of arrangement. But what he did was he went and hired another location somewhere near, but not in the McDonald Brothers restaurant or facility. And he started to experiment until they got it right, how to make the hamburgers, how to buy the right ingredients, how to man the premises. They did all that pre-planning before he made any sort of move on changing things within the McDonald's brothers business. So they created the strategy. And then he went out and started marketing it. And what a job he did. There's now 40,000 McDonald's franchises around the world. And the guru of business systems, of small business entities, Michael Gerber, claims that the success was because Kroc visualized what the future would look like, what the end result would be. And he experimented in another facility until he got it right. Now, not all of our clients might want to go off and go to the same detail, but Gerber was quite emphatic in that interview that that's what's needed if we want to create successful businesses. So one of the key takeaways from that was when clients first come to see you, if they're starting a business or buying a business, or even if they've bought a business and they're switching accountants because they've heard that you can give them some enlightened guidance, it's an appropriate time to sit down and understand their vision. What do they want to achieve in the business? What's their end result? What's their final exit going to be? So that the planning can start there and then to achieve that. Accountants and bookkeepers obviously play a vital role in helping clients, because I can't think of any other profession that's out there that's making the time commitment to SMEs that accountants and bookkeepers do. There are other professions involved, of course, in helping business people, lawyers, architects if they're designing premises, builders, the software developers, but no one else spends the time and energy that we do. So what Gerber called this pre-planning was going to a dreaming room where they sit and think about what their business should look like, encouraging the clients to do that. If you had a room in your facility, in your office, you could do that for, that would be great. Just put them in there with some water and tea and coffee facilities, whiteboard, and just ask them to think. And I think they'll need some notes from you of some of the key issues, because they all need a business plan. But they need, first of all, to have a strategy, a vision. So they need some butcher's paper, the old-fashioned butcher's paper, big screeds where they can just write what they think of certain issues. And I think for many of your clients, you can play the facilitator for this. but try to make them do the thinking, them do the planning, and you just fill in the gaps to make it workable. So the foundation questions are, what type of business do you want? How big do you want it to grow? How's it going to operate? How many hours are you prepared to commit to this business? Is this type of business going to suit your family situation? Have you thought about weekends and the work involved in by most people running a business? Do you need any special licenses to run this business? How are you going to manage the inventory, the financial arrangements, debtors? Have you got a debtors system? You know anything about management of debtors? And have you got a business plan? And then I think you should be helping them to prepare their business plan. And then the financial interpretation of the business plan, which is the predictive accounting reports, the budgets, cash flow forecasts, and predictive balance sheets, so the client can see what the end result might be in 3, 4, 5 years' time, and then work towards that. This process helps commitments to be made. Gerber said, a business with a system is a brand. A business with a system is a brand. A business without one falls apart. Hence his comment that 98% of businesses are not making a 10-year celebration. So without appropriate systems for SMEs, mistakes multiply, chaos grows, and financial management becomes guesswork in all types of business. Your client running a business has about 30 to 40 separate operational areas to worry about. You think about it. We have a paper in our system which lists them all, 30 to 40. Now, in a larger business, the responsibility for those 30 to 40 key responsibilities would be allocated amongst a team of the leadership team. They'd all have 3 or 4 items to be responsible for, not 30 to 40 on 1 or 2 people. And this is one of the problems that small businesses have got. And one of those key areas is financial management. Who does your SME client ask for advice? And this is one of the subject matters you can bring up in the dreaming room, where you can be saying to the client they need financial management assistance right from day one, weekly, monthly. Otherwise, they'll probably end up a statistic. And you might well decide you don't want them as a client because they're going to end up being problems. Because when people go broke, invariably, accountants don't get paid for some of the services you've rendered. And there's a fair bit of stress if you've got that going on in your clients. So be upfront and give them a proposal which includes the supply of a proper financial service right from the start. I'll give you an example that really happened with me. I was approached by a gentleman who told me he'd been the ex-managing director of a public company and that he'd now semi-retired and he'd bought a retail grocery type business. And he asked me if we'd look after the taxation matters and sit down and have a discussion with him every 2 or 3 months, and he'd tell us how he was going. And I said, well, we can do one better than that. We can offer you a full financial accounting system whereby we will set up a weekly reporting system, we'll prepare monthly financial accounts, and we'll have a discussion each month. And we'll be giving you your cash flow forecast 12 months in advance. He said, oh, no, I don't need all that. I understand all that. I'm the ex-managing director of a public company. So I must admit I was reluctant at the time, but I didn't mind this gentleman. So I said, okay. Because normally we would only take on new clients at that stage if we were going to be involved in their proper financial management. About 2 months later, he made a phone call to me and said, "Can you come round to my business today, if possible? In the next hour, if possible?" I said, "What's wrong?" He said, "I'll tell you when you get here." So when I turned up, I said, "What's the problem?" He said, "I think someone's pinching money from me." I said, "How'd you work that out?" He said, "Well, we're very busy." And I looked around the shop and there was plenty of customers there. And he said, "But the bank balance is going backwards. I don't understand it." So when I looked around and asked him some questions, I said, "Well, let's have a look at how you set your pricing then." We looked at other things. He was checking his stock in. Everything was going through the cash registers when people paid their bills and off they went. He had no fear that people were thieving a lot of stock from him. And I said, "How do you set your prices?" He said, "Well, I got my landed price." "Yeah, I got your landed price." And he said, "I add the gross profit percentage." And I said, "You add the what?" And he said, "The gross profit percentage." I said, that's where your problem is. That's wrong." "Oh, no, it's not. No, it's not. You add your gross profit percentage to the cost of the goods." I said, "No." He said, "I'm an ex-managing director of a public company." I said, I'm an ex-company secretary, chief financial officer of a listed public company. And I'm telling you what you're telling me is wrong. So he debated that with me for about 5 minutes. And then he really started to think and he said, "Oh, okay." I said, "What you should have been adding was the markup percentage." And he went white in the face. And he said, "Oh, okay." He said, "In my previous life, of course," he said, "I was the managing director, but I had 2 qualified accountants there doing these sorts of calculations. I never actually did them myself. I was always considered to be a very good marketer and communicator, salesman type, get on well with the customers and the suppliers. I didn't get involved in that sort of calculation." So that's why I suggested to you we have the full financial management accounting system package that we're able to deliver to you. And about a minute later, he turned around and said to me, "Yeah, okay, sign me up for that. We'll meet every month and we'll analyse the financial performance." Because this had given him a real shake. He'd lost a fair bit of money. So he got called away for an urgent phone call from one of the suppliers. And so I started walking around the shop and I ran into one of his staff who I knew. And I said, How's life here?" She said, "Oh, so. I said, "You're busy, are you? Plenty of customers. Why not at the prices he's selling it at?" I said, "Well, he's been a bit worried." He said, "So he ought to be." I said, "Why didn't you tell him?" She said, "I'm the ex-managing director of a public company," very sarcastically. I said, "Is that what he said?" She said, "Yep. He didn't want any input. We told him he was underpricing." She said, "Look at all these people here. They've all found out all these cheap goods are here." So when he come back, I said, "I think we better go and have a cup of coffee and have a bit of a discussion." So we went and found a coffee lounge. We sat down and I said, "Now you've got a problem. One of your most experienced employees who I know, and she's been around this sort of business for a long time, and I had dealings with her in another client's business. She tells me she told you that you were underpricing and you told her to mind her own business in effect. And she did, and she told the others just to back off. And now you've got a problem. You've lost a lot of money. You were smart enough to realise you were losing money. That's why you rang me. But you ought to realise when you're running a business, it's a team effort. At least one of your experienced team members told you there was a problem. That's when you should have rang me and said, "My most experienced team member tells me I'm doing it wrong. Can you come and tell me what's right?" But you brushed her off. So we got that sorted out and we got the business fixed up. But it was a very important lesson, I thought. But what it also highlighted is the benefit that big companies get by employing full-time accountants. In the company that I was chief financial officer and company secretary of, we had about 8 qualified accountants around Australia working full-time, and we had another 5 very skilled office managers who did the role as accountants. They'd been set up in the systems and they did it. Compare that to your SMEs who have got no one giving them advice. How many of your clients are adding the gross profit margin to their selling price to get to their purchase price to get a selling price? And that might be why they're underperforming. So in setting your clients off to business success, we need to make sure they understand the perils they can get into. And more, I think we should be really singing from the treetops that SMEs need to run their businesses similar to public companies. Now, they cannot afford to employ 2 full-time accountants, like my former client told me that he had at his beck and call. But what they need to be able to employ and pay for is your services on a virtual CFO service arrangement, which might be the equivalent of a day a week that you're charging that client and you're supplying that service to them. And quite frankly, when they're in the dreaming room thinking about their business, these are the things that should be said to them. And if they cannot afford those services, I think your best advice is to say to them, I don't think you should be going into a business, because you will end up a business failure. You will lose money. That will create enormous stress in your family and in your own life. It might be better if you wait another 1 or 2 years, save some more money, get more capital into the business. If it's a great idea, perhaps they could look at trying to raise capital as a crowdsourced funding equity raising company. But it'll need a good idea if it's a startup business. But if it's established business that clients buying into, maybe they need more equity. Do they really need to own 100% of it when they're struggling to find that money and it's not enough? If they need a couple of $100,000 more and they've got a good concept or a good business, never forget the opportunity that we've now got to help clients raise capital through crowdsourced funding equity raising. $355 million has been raised in 8 years in Australia, and I think a lot more can be raised, but that's another subject. So what we need to be working with our clients is to help them to have a business plan, so they've got that vision document out of the dreaming room, and from that can come the budgets and cash flow forecasts, and then monthly management reports, but before that, weekly performance reports, because that's what the big end of town do. That's what the company that I was involved in did. We knew every week what our results were. We were a major meat company. We had major international meat works, but then we had retail butcher shops, small goods factories, and all sorts of other small businesses. And each week we had a performance report for each one of those and a profitability report. Now, some of the profitability report information was based on estimates. At the end of the month, we'd prove the figures. And that's what the CEO ran the company on, those weekly results. Now, that's a common theme throughout the meat industry around the world, weekly reports. But it's also what Woolworths use and Coles use and IGA franchises use and a whole range of other businesses. It always makes me think when I go to a supermarket and walk outside the Woolworths or Coles or the IGA, and you'll see there's a small butcher shop, there's a hot bread shop, there's small goods business, and they're competing with someone inside the Woolworths banner or the Coles banner that's only 50 metres away. Yet the manager of that overall store knows by Monday afternoon, Tuesday morning, the results out of his 40-odd departments in that business. What information does your client, sitting 50 metres away, running a butcher shop or a small goods factory or a hot bread shop or a cake shop, all competing with people 50 to 60 metres away? who have got this input of information about their performance. That's the challenge. And if we don't fix that problem, small businesses are going to continue to suffer in Australia and around the world. And that's what Michael Gerber was saying. We need to encourage people to go into the thinking room so that they can think through what they want to achieve in their business. The dreaming room, sorry, I knew I'd said it wrong when I said it, the dreaming room. But we also need to make sure our clients are getting key performance indicator information, because that's very important to help them in their management of their businesses. ESS BIZTOOLS has developed packages which are contained within the starter package to help you to start this journey with your clients, to set them up, to try to ensure that they become a business success, not a business failure. It is hard. It's not easy to win a premiership football match or a cricket match or a tennis match. There's training, there's processes to be abided by. You're then going to play according to the rules, otherwise you get sent off or get penalised. That's the same in a business. And your clients need assistance. If a public company needs 2 accountants in-house to help doing the sort of calculations I referred to before, the company I was with needed 8 qualified accountants plus me, and then 5 very highly skilled office managers to run. And we all work for local area managers, or in my case, the CEO and me. Our SME clients need some input. They need to have someone they can ask the what-if questions to. What if I change this recipe? What happens if I did this? What happens if I bought an extra $100,000 worth of stock? What's it going to do to our cash flow? How long before we can get that back? What's the cash turnover rate? There's a whole lot of questions. I got bombarded with questions from the CEO and other members of the leadership team. Pete, do you think you can come in here for a while? We'll have a look at something. The sales manager wants to do such and such. I want a financial input on that. What's it going to cost us? Is that going to be better to our bottom line or not? I know that SME operators have similar questions, because they tend to talk to me when they see me at the golf club or the pub, and they say, well, what should we have done? I said, go and front your accountant and tell your accountant you want an answer. Oh, he only does tax. I said, well, it's about time you asked him or her to decide. Are they going to continue to do tax, or are they going to offer you services which will help you survive in your business? That's the challenge for today. And I think that's what should come out of the dreaming room process, so that we could run into Michael Gerber at some time in the future. We'll have to do it soon because the man is 88, but nevertheless, he looks very well. But we could run into Andrew Gerber and say, we have done something to reverse this trend. We want to lower it. We want to get it back to 5% do survive for that 10-year period. And hopefully over the next 20 or 30 years, that figure can be brought back to something far more realistic than a 98% failure rate over 10 years. If you've got any questions, please contact us at ESS BIZTOOLS, www.essbiztools.com.au. And don't forget, the starter package is available for you now. Your subscription is very low, $1,300 a year. You will make $1,300 in 1 week if you start utilizing the system. So you work out that return on investment. You've just got to make the commitment. You've got to go into your own dreaming room and think about how you can really offer services to help SME clients survive and thrive and scale up if that's what they want to do. Have a great day. Goodbye.